Hey, good evening, everyone. Just give me 30 seconds and we're going to start. Okay, good evening, everyone. Thanks so much for giving me your time. I think you're going to find that it hasn't been wasted on a Sunday evening. I had a pretty good weekend. I spent a lot of the time sleeping. It was really great. Um, but let's move forward. This quick disclaimer that all signals and trading opportunities provided, both oral, written, or electronically, that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Rightline takes no responsibility for subscribers within any of the markets, futures, forex, stocks, nor for any profits or losses that may be incurred. Careful consideration of your financial position should be made prior to trading. Never risk more than 2% of your account on any trade. Do your own due diligence. Consult a financial advisor before making any trade decisions. And we are not licensed commodity trading advisors. Now, that mandatory disclosure out of the way, I think you're going to find this to be a very, very unique lecture or webinar, whatever you want to call it. And I'm offering a brand new service. And I don't really do that very often, but I do this anyway. And so I thought that I would offer it out. You're going to see that I already offer it to 3 traders as a beta test. And we've done extremely well. And I want to describe the service to you. Now, I call it the Elite Wealth Building Portfolio. It's very complex. It's very difficult for me to do, but it's sort of my passion and my love. And I'm going to describe it to you. Now, I just want to throw in a little bit of stuff about stock picking services. There are not that many of them out there, and when you get them, a lot of them are just hype. They're looking for penny stock pump and dumps, biotech breakouts using simple chart patterns that oftentimes fail. They don't do an enormous amount of technical and fundamental analysis to get you into great stock positions, or potentially in some cases options positions that have the tremendous likelihood of being not just singles or doubles, but we're looking here to go for home runs. So I think this is a very, very unique service. And really what they're doing is they're looking at that J pattern, which is just a bunch of nonsense. It's gonna work sometimes. It's not gonna work others. Other times it's stock in an uptrend, gets bad news, pulls back, consolidates, and then traders come in and start pushing it back up again. And if you listen out there to to these gurus who started with $100 and now have 55 million. They'll tell you they just traded this J pattern and now they're driving around in a Learjet. Only if a pattern this simple was going to make you that much money, there wouldn't be any losers in the world, and 100% of the population would be rich. I just wish it was this simple to trade, but I can tell you it is not. There are no 3 simple secrets, 3 simple chart patterns, 3 simple anything that are going to make you a significant amount of money year after year. And let's look at some of the world's leading traders right now. I mean, Warren Buffett, Carl Icahn, in the past, Peter Lynch. I mean, these guys didn't trade J patterns and rising and falling triangles. Their life revolved around what they did, and they did just a tremendous amount of analysis before they could buy or sell a stock. And they would make 25 to 30% a year in their portfolio. Now I'm looking to do better than that, but these multi-millionaire pump and dump gurus are never gonna get you anywhere. I mean, I just recommend if the only thing you take out of this is to stay away from them, then you've saved yourself some money. Now it's the same thing with options newsletters. Everyone makes you rich. And it's really easy to sell you an options newsletter because they're really elegant leveraged instruments. They're difficult to understand really when you get all the way down to it. And what they're looking to do is to sell you a mentorship. And it's great to sell mentorships because they teach you how to pick your own positions. So then if you don't make money, of which 99.99% of traders don't, then it's all your fault. And you only have yourself to blame. So it would be great to try to sell you a $5,000 mentorship program. I'm going to teach you everything I know, then cast you off in your canoe down this treacherous path, and you're very unlikely to make any money. But none of it's going to be on me because I didn't put you into the position or get you out of the position. And this is nothing like any of that. I mean, I take responsibility for all these positions. And I take responsibility for all the due diligence, and there's no mentorship program here. So that's just a little bit of a preamble to this newsletter. Again, I'm not into hype and sleight of hand, and honestly, I'm not into BS. I am a serious investor, and I believe you're only going to join if you're a serious investor. If you're looking to make 1,000% a year, or 200 or 300% a year, you're not going to do it. Traders just cannot make that kind of money. And I think your head's being filled with a lot of bad stuff because all those advertisements on Facebook and YouTube and Instagram all tell you can, but on a practical basis, you simply can't. And I'm trying to bring you back to earth. Now, I'm going to guarantee you a really stellar return, or you're going to get your money back on this newsletter. But you're not going to make 1,000% a year. It's just not possible. And you're not going to turn $100 into $100,000. And I've seen that over and over again. Now, what I'm going to do is I'm really going to provide you with unique investment opportunities that have the potential for big returns. And in general, they're not going to consist of widely traded tech or blue chip stocks. And that's what's really going to be advantageous here. These are stocks that are not, they're sort of off the beaten path, but what I really like about them is they're totally immune to a general market meltdown or melt up. If the NASDAQ's up 100 and the Dow's up 250 and the S&P's up 30, these stocks are not going to move. If it's down 100 in the reverse, these stocks are also not going to move. They have their own unique catalyst, and they're small. They generally have a small float, and they are simply waiting for that catalyst to hit. And until it does, there's going to be very, very little buying. Again, they have a small float. A lot of that float is owned by insiders. It's owned by the CEO, the CFO, market directors. There's only a small amount of stock available to us as commercial traders. And as the market moves up and down, and we see all this market volatility, these positions are really not going to move appreciably. And I'm going to show you a few that I'm still holding. And I'll show you a few in the last 3 months that I've recommended and cashed out. And again, they each come with their own unique catalyst and the date that we anticipate we're either going to ring the register or potentially we're going to shed a couple of tears. Now, in most cases, so far, I've been banging the register. And I think that we're going to be banging the register the majority of the time. Although, again, I'm never going to swear to you because I'm an honest guy and I'm a real life investor. And investing, I mean, it involves risk. And if you're going to risk money, you always have the potential for to lose. And that's not part of the disclaimer. It really just is the reality of investing. You want your money in any other place but a 401k, in your retirement account, in a money market account. You want better returns, there's always associated risk. Now, it really does take me a huge amount of research to find these investment opportunities. And what I do is I'm like kind of a late night, midnight owl kind of guy, and all the guys who work with me, Rory and Sergio, they know that I stay up really late at night. And what I do is I work with my phone app. And you'd be really surprised how much information you can get off a Thinkorswim phone app. You can get a lot. And that's what I do. Like, instead of watching late night news or YouTube, which I also enjoy doing, I just go through my potential investments and I vet a lot of stocks. And you can get an enormous amount of information off of your Thinkorswim app. And again, I just wanted to emphasize, I'm not going to teach you how to do this. If you want to, I can, but I would recommend that you let me do all the heavy lifting because I'm going to show you that I also have a team behind me in one area because it's not possible for me to do this by myself. And the area in which I have assembled a team is, I think, the most lucrative area we have to invest. There are areas that just traders are just not generally aware of, and they don't target their money in this direction. And we will be, and I think that we can really do a great job and really do some cleanup here. Now, this talks about the other options newsletters. I don't want to go into that anymore. I know that all of you are aware of them. I have an email that I just set aside for spam, and because I like to see what everybody else is offering. I have about 1,000 newsletters in there, every one of them promising to make me a millionaire. Because I like to see what they offer, what they're trying to do. One guy has 20,000 options picks, and he's had three losers. I want to see what's out there. So let's look at the first sector or the first area that we're going to be looking for to make money. And the first area is going to be insider buying. Now, again, I don't like to keep looking back to other newsletters, but there was a big newsletter for $2,000. All they would do was simply give you the insider buying. Now, all of this information is subject to mandatory disclosure via a Form 4, I believe it's called. So anyone who chooses to seek it out can always determine when an insider made a large block purchase. The problem is it's not as simple as these investors make it out to be. If you buy or sell a stock right after the insider makes a stock transaction, it's not going to always work. If it did, we'd all be rich. The other thing is, this is not a portfolio where we want to accumulate positions and buy and hold for a couple of years. If we did, a lot of these positions would be pretty advantageous, because if you see a CEO or CFO buy 1 million shares of his own company, it's very likely he knows something that we don't. And the stock is likely to appreciate in price. It just may take place over a long period of time. And you have to look and see where they're making the purchase. A lot of times they make it in a family trust, which means their timeline is extremely long. We don't, in general, although you're going to see I did take a pick in a stock where the investor placed it into a family trust. In general, those are the things that we want to shy away from. I'm just drinking my booze. I'm just kidding. So you have to really vet the stock. Now, properly examined, insider buy and sell transactions can really lead to stellar trade opportunities. Now, these are pretty much low risk opportunities, and the lower risk, the lower the reward. This is a sector for somebody, or these trade opportunities are really going to benefit someone who really does not want to take a massive amount of risk. Because what you're looking to make here is 20 to 30% on your money. You're not going to get a doubler or a tripler off of an insider buy in 99.9% of the cases. You're simply looking for the appreciation of the stock 20 to 30% over the course of 3 to 6 months. And if you get that, you've got yourself a home run on an insider buy, and that is all we're looking for here. It's very, very unlikely that the stock is going to go down, although that happens. And there are a couple of trades. I don't have I didn't create charts for them, but I've seen a couple of insider trades where the stock has really taken a nosedive. Now, these insiders are in that for a long time, and ultimately 6 months from now they may be big winners. But right now they're sitting with a nice loss. Now, the first one is Technip FMC. This is one of the recommendations I made. The CEO is Douglas, whose name I can't pronounce, and doesn't matter. But he took about a $1 million position in the company. Now, he's the CEO. He did put it into a family trust, but I really, really like the sector. Now, we got in around 18 bucks. Now, we got in around $19. What I did was I just circled the swing low. We got in right after he did. The Form 4 came out. He purchased it from 1906 to 1936. And Technip FMC PLC, or ticker FTI, is in the oil and services industry. And what it does is it provides technology to offshore platforms, to drilling companies, software, not hardware. And I really like this sector, and I really like the way the stock has performed. And I really was buttressed by the fact that the CEO stepped up and bought $1 million worth of stock. We got around 19. It's up at around 24. Is about where we closed the position, and we made a nice amount of money on it. Now, this is a potential long-term hold. I like the sector, I like the stock, but again, we're not in this for a long-term buy and hold. The position was right around the first of the year. All these positions are just approximately 90 days old, which is when I started making these recommendations. The other one was Aramark. Now they're in the beverage industry. They supply beverage utilization, distribution to companies, to schools, to to jails. He stepped up and he bought $3 million worth of stock and an average price at $32. And the stock went to 35 and we were out. I mean, this was a terrific insider purchase. It gave the stock a nice push. And we made about 20% on the stock and we're gone. Very, very little downside to this stock. And this is a great position. If you're willing to take a 10 to 20% profit and you're not looking for a big 100%. Now, let me tell you, there are probably a dozen insider trades that cross every week. You have to be very, very picky about what you get into. I didn't put in any of the insider trades that are either sitting flat or going down, but a lot of them are. This is Royal Caribbean, and it's one of the stocks I follow, and it's one of the stocks I love. Now, what you're going to find is that the insiders don't get in at the bottom. They let the small commercial trader take the stock off the bottom. Then they come in right off its bottom. And they came in around 105. And I'm telling you, we're in right after them. There's no reason to wait after they make the huge commitment. This was a $2 million commitment. I like to see it made by the CEO, and I love the sector. I have bought and sold Carnival Cruise Lines probably a dozen times in the last few years. The entry was right around the entry price of the insider purchase, around 105. It appreciated to 124. Again, this is another potential buy and hold, but I would rather buy every dip on a major insider purchase and sell when we've made about 20-25% on the position, and then get out. Here's another one, FedEx. FedEx is very, very sensitive to the growth, to economic growth. Now, if the director is going to buy $1 million worth of shares, or $1 million worth of the company at 162 a share, we're going to get in right behind him. And the stock went up to as high as 187. Now, again, we made about 20%, and it's another buy and long-term hold position, but we're out. We're not looking to hold this long-term. And FedEx can make a big, big dip if the Fed resumes interest rate hikes and the economy and inflation starts to rear its head. And we'll buy FedEx on another dip if another insider pops another $1 million down on an insider trade. And this is really the most straightforward. We're going to get into the more technical and more complex in a second. And then I wanted to show you one that I'm holding, in which I'm just simply waiting around, because this is a stock that falls into a couple of categories. Iovance is a great company. It's a small biotech company, and actually, when we bought it, we actually were down quite a bit on it. We bought it at around 12 bucks. I'm sorry, around $10. And it dropped to $7.26 right here. I'd like to tell you I bought it at $7.26, but I didn't. I bought it right around $10. It dropped to $7. It's now, I was just looking at the last price on Iovance. It's trading as of the close on Friday at $9.51. And this sort of crosses over into those phase 2 approvals. It's waiting for a phase 2 approval of an anti-tumor medication in which it targets T cells against cancer cells. And the cancer, I think, if I remember correctly, is metastatic melanoma. A melanoma has absolutely no cure. So this has the potential to really be a rocket stock. It's just kind of drifting right now. And I don't know the FDA approval date or the FDA phase 2 announcement date is I bought this as an insider trade, and I have to find that insider date. That's either going to send this stock rocketing, or it's going to take it down. But I like the way that it's accumulating buyers. Buyers are accumulating stock off the bottom. Now the other one is really a really technical area. This is where we're looking for home runs. We're looking for 60 to 70 to 80% on our return on our money. And these are pharmaceutical companies that are heading into FDA announcements of the outcome of a phase 2 trial. This is a very technical area. And what I've done is I've gone to the University of Miami School of Medicine, and I've recruited 3 really bright guys. One's an immunologist, one is a cardiologist, and one is an oncologist. Those are the 3 hottest areas for phase 2 trials. Whoops, I'm not sharing my screen. Holy God. Oh, hold on a second. I am so sorry. Hang on a second here. You people have been so kind to hang in there without any screen sharing. I'm so sorry. So you kind of missed my first half, but you can get it on the replay. But geez, I'm just going to really go quickly over the stocks that you didn't get. I really apologize. This is Technip. This was the insider trade in right around 19, out around 24. Here is Aramark. This is the company that does food services, insider buy. This is a vetted company that has great earnings. It's in a great sector. Another $3 million insider acquisition, right around 32, went to 35. Royal Caribbean, one of the stocks I really love, insider buying at 105, out at 124. And then FedEx. 3 great insider buys, all for about a 20 to 30% return on investment over the course of about 60 to 90 days. And this is Iovance, the insider purchase that's waiting for its FDA approval on its T lymphocyte targeted medication to kill malignant melanoma and other cancers. And here's where we are. I'm really sorry. Thank you so much for staying in the room and not having anything to watch. Now, we're just getting into the technical part anyway, and this is the most important part. I mean, Rory just texted me to tell me that I wasn't projecting a screen, and I just completely forgot. Now, these are pharmaceutical companies heading into the announcement of the outcome of a phase 2 trial. Now, a phase 2 trial is obviously a critical trial. A phase 1 trial looks at the toxicity of the medicine. It's normally not that expensive. You can do it on a relatively small number of patients and determine with a significant degree of statistical relevance that the medicine is not going to cause any harm, at least in an early phase 1 trial. The phase 2 trial is expensive and difficult because here's where you have to prove that the medicine works. And phase 2 trials are double-blind, placebo-controlled studies in which you take a patient with a particular illness and you randomize them to either receiving the placebo medicine or the actual medicine, and they both look identical. And the people who administer the study do not know whether they're giving out placebo medication or they're giving out actual medication. Everybody is blinded as to what they're receiving, both patient and study administrators. Now, the bigger the study, the higher the statistical relevance, with the smaller the confidence interval. And if you've ever looked at a political poll, they'll always tell you, okay, this candidate is ahead 52% to 48%, with a margin of error of 2 or 3%. Well, on a phase 2 trial, you want that margin of error to be extremely small. And the only way you can do that is with a very, very large study. So these are very expensive studies, and these small biotech companies put a lot of weight into these trials. Like I said, it's an enormous and very expensive endeavor. Now, the FDA approval will send a small biotech company flying. Now, a denial might send it into bankruptcy, but we're not going to take positions in companies that aren't sitting on a tremendous pile of cash. So the company is not going to go bankrupt if we get a denial, but it's going to take a hit, and we're very likely going to exit the position. Unless the FDA comes back with okay, we love your medicine, but you have to make a couple of small changes, and then we'll reevaluate it. Those are stocks we may hold, and you have to do a lot of research. You have to go to a medical school library, pull all the phase 1 studies, look at the molecule, and really do a tough evaluation of whether or not you think this medicine is likely to get an FDA approval. You can come up with a pretty good assessment. And I've been doing really well, but this is the area where I have 3 professors at the University of Miami helping me, and they're not helping me for free. So they're working with me on this. Now, the first drug that we picked was N1539, and it was made by Recro Pharma, and I love this area. The FDA is looking desperately for non-opioid alternatives to pain. I mean, that's a very, very hot sector. And if you can create a medication that still needs to show with statistical relevance that it's effective, they're likely to go your way, though, and not give you a hard time getting it through. Now, meloxicam, which is the active component of this medicine, has been around forever. And it's a well-tolerated painkiller with really few side effects. They sort of retooled it, created a new medicine out of it, and it got approval. It's a tiny $170 million company, and it's really looking to be on the front edge of fighting the nationwide opioid crisis, because this is really, really a big problem. So this medicine, which still is 1539, because it still is not ready for distribution to the public, it still has to go through a phase 3 trial and then possibly a phase 4 trial, is now known to be effective. And here's what happened to the stock. Now, this is where the date was announced that the stock was going to undergo FDA approval or denial in March. It was trading at $6.73. And what you normally see, if you pick right, is that commercial traders come in behind you. Not the big pump and dump guys. Traders who are looking at the same thing that you are, and they accumulate the position slowly over time. And then when the approval hits, the stock flies, and then you got to get out. Because what happens in this big candle is the pump and dump guys come in. Comes up on their radar screen. They try to get in as low as possible. We're in way down here in the $6.80 range, and they're going to pump the stock all the way up to 1032 on this wick. We're going to get out on the day of approval and get out at the top. And then the stock is going to almost always collapse as the pump and dump guys get out. And this is a perfect example of a great FDA approval medicine where we made really, really good money. And here's another one. This is Synexis's medicine. Now, it's both an oral and intravenous medicine for the treatment of various life-threatening fungal infections. And although you may not believe it, one of the most serious post-operative infections you can get after, say, open heart surgery, major intra-abdominal surgery, is a fungal infection. And the medicines that are around to treat it right now really don't have a lot of effectiveness against Candida. I mean, Candida is a normal commensal of the gastrointestinal tract. But if it gets into the blood, it's very likely to kill you. And Synexis produced both an oral and intravenous treatment for this fungal infection. So it was a desperately needed therapeutic alternative for a life-threatening infection. And the same medicine, also both in oral and intravenous form, which I really liked about this medicine, is it treated a very common illness, which is vulvovaginal candidiasis. And in women, this is a really big problem. A lot of topical preparations don't work. A lot of oral medications don't work, and it keeps coming back over and over again. And it can cause a lot of discomfort, a lot of itching, and a lot of pain. So it's not a trivial illness. So it came up for approval for 2 separate uses in both the oral and intravenous form. And if you looked at the phase 1 trials, this showed very, very little toxicity. Now, the intravenous preparations to treat antifungal medications, to treat fungus, is extremely toxic. I mean, you either die from the fungal infection or you die from the medicine. That's amphotericin. It's a whole host of very, very toxic medications. So there's little therapeutic alternative. And I felt the likelihood of this medication getting approved was exceedingly high, given its sector, given the therapeutic alternatives currently present in the market, and given the phase 1 studies that had been done showing very, very little toxicity. And Synexis was one of our biggest home runs. We were in about 40 cents and change, and on approval it went to $1.82. Now you can see it had 2 spikes. The first spike is its approval of its oral form. The second spike is its approval of its intravenous form. Boom and boom. And we held for the approval of both. And this is a stock you got to get out, because I don't have where it did on the right edge, and I have not been following it since I bought it and dumped it. But likely, the pump and dumpers come in, and they're going to push the stock higher than its actual value for a while. And it may be a long-term winner, maybe a $5 stock someday. But we're not looking for a long-term small biotech investment. We're looking for a phase 2 FDA approval and to get out. This is an enormous winner. The other one is Galaxone by Marinus Pharmaceuticals, and this is one I'm still holding. And this is another tremendous opportunity. Now, let me tell you, these opportunities come up every day, but the vast majority of them are really toss-up approvals versus denials. You really can't get a good handle on whether or not they're going to get past the FDA or not, and those you have to step aside on. This one, I think, has a great chance of being approved, and I still have it in the portfolio. The medicine is called ganaxolone, and it's for the treatment of status epilepticus. And what I like about it is that there is no FDA-approved treatment for status epilepticus. I mean, I'm sure everyone's aware of it. You know, it's where you fall down on the floor and you have these tonic-clonic movements of your arms and hands, and you just twitch away. It's a life-threatening condition. Your airway can be obstructed. You always have to go to the intensive care unit and spend at least a few days there. There's treatment for it, but there's no prevention for it. Right now, the treatment is they'll give you Dilantin, they may give you phenobarbital, they may give you a couple of medicines. But if you look at your EEG, that epileptic focus in your brain is still continuing to fire. So when it's going to actually trigger another bout of status epilepticus is completely unknown. Galaxone ablates that epileptic focus and really is the first potential serious treatment for status epilepticus. It has not yet gone up for FDA approval. Now, this is one of the few positions I have an option on. I have a $4 strike price on Galaxone that expires in April. Now, it's supposed to go up for FDA approval. I don't remember the exact date. It's the first week in April. Now, my only risk on the position is that the FDA will postpone it a month, which doesn't hurt or help the stock. They routinely get they just get bogged down and they'll just put it off. Now, I'll show you where the stock is trading. Now, it made a great move up. Now, I didn't buy it this low. I bought it at about $3.80. It was as low as $2.45, but I didn't get in down there. But right around $3.80, it was up to $4.63. Then the CEO quit for God knows what reason. And the stock took a dump. And now it's coming back up. And I believe on Friday it closed at $4.12. So the out of the money call I bought is in the money and it's up a few cents. So if it does get put off a month, it won't appreciably hurt the stock price, but I'll be able to get out, maybe just down a little bit of money. But I'm hoping it won't get postponed. And I think it has a tremendous chance to get approved. If it does, I mean, it could turn the stock into an $8 or $9 stock easy. Now, everybody pumps and dumps penny stocks ready to explode. Everybody. And they're all pump and dump stocks. They're not stocks that you have picked based on fundamental analysis and what you believe is a terrific technology that just hasn't caught on yet. And I'll just show you a couple. Again, I put in this slide, everyone salivates over penny stock winners. I like these particular industries. I like the pot industry. I like the crude oil industry. Now, I left out the pain management industry, which I should put in there. And I like the drilling industry in cobalt, lithium, and zinc miners. And that's just to name a few. Again, the opioid analgesic area also is really a big area. The trick is to find the winners and get in before everyone else does. Because once they fly and the pump and dumpers come in, you're just going to get caught holding a lot of stock. And it's never going to come back to get you again. They sit on a very small float, and that's what these guys who hype these stocks count on. You're going to come in and push that price way up. They're already holding it, and they're going to be the first ones out. I mean, it's a legal Ponzi scheme. Now, one of my first picks was Kush Holdings. I looked at it in the cannabis industry. And to make it very simple, it provides packaging on a business-to-business basis. It provides bottles, bags, tubes, containers, everything, and it sells to other businesses, which legally operate, I mean, obviously not illegally operate, but legally operate medical adult use dispensaries, growers, marijuana-infused products, producers in states with marijuana programs. Now, this is a company that could be a massive company someday. I mean, even though there have been some recent setbacks in the approval of the recreational use of cannabis, I just think it's a wave. I personally don't bring my personal feelings into the investing arena because I'm here to make money, unfortunately. But I mean, I think that recreational pot use is not a good deal, but it's going to get legalized everywhere, and this is going to be a tremendous company. Now, if you ever saw any company more primed to fly than this, it was Kush. Now I got into Kush around 30 cents, right around here, and it went to $8.51 at the high. Because what happened to Kush, and these are real trades on real stocks. These are not hypotheticals, and these are not pump and dumps. It was bought on the basis of its fundamental analysis and also the technicals that it was simply basing here at just under 20 cents. And it was basing and consolidating here for a long, long period of time. And I didn't buy it at its, right here at about 18 cents. I bought it at 30 cents. And it went all the way to 8.51 on the hypers, on the pumpers and dumpers. If we can get in ahead of them, we can use them and leverage them to make us a lot of money. Now, you see right now it's just it's got wide-based consolidation in the $6 area. Now, I think it's still got room to move to the upside. And if you had enough money to buy and hold this stock for, say, 24 months, I think you have a great shot at making a lot more money. But this is the penny stock portfolio. We're looking to make a big amount. We're not in the buy and hold business. Ultimately, we wind up holding everything we buy because I really like what we buy, but we're out of this stock. Here's another one, Mobiquity. Now, just to torture myself, I don't know much about digital marketing and media. And you know that a lot of companies do a tremendous amount of digital marketing, and we don't. They're on Facebook, they're on YouTube, they're on Twitter, Instagram. I mean, I can't get rid of them. They have a cookie on me, and they follow me around and they torture me. And so I went to a community college here, and I took 2 classes. Each one was about 3 months. I took one semester. I took a semester's worth of classes in digital marketing and media. And one of the professors tried to create a company like Mobiquity, and he failed. And I was really sorry because he was a really nice guy, and he got a lot of investors involved. And I saw him on the internet. I saw him on my cell phone, but the company never got traction and never made it. But what Mobiquity does is it's the same model that he tried to create. It operates a mobile advertising technology company, and it provides location-based data and insight on consumers' real world behavior. Like, it can tell what you're interested in by looking at what you look at on your cell phone. And it collects a tremendous amount of marketing data for companies to purchase. And it is acquiring large clients. And I think it's really in an infancy. And it's a terrific company. It's doing what many have tried and failed, but it's got traction, it's got clients, and it's growing. And here's Mobiquity. Now, Mobiquity, I did get in at 7 cents. And it's up to 24 cents. And I'm going to hold Mobiquity. It's back down to, I can't read I think it's about 19 cents now, but I really like it. And I still think it never got into the pump and dump circle. It's just rising on the expectation that it's going to strike. Now, I mean, my recommendation in the portfolio is to hold. I mean, you can always dump it at 24 cents. Remember, it's going to take you a while to get out because the float is small. But Mobiquity is a terrific stock. And I think it's good for another 3 to 6 months of holding and more than 24 cents. And then the last one is ADMtronics. And really what I'm waiting for is the rollout of its RX3 non-invasive tinnitus therapy device. It's real cool. I've seen pictures of it. I saw how it works. There's a huge number of people in the world who suffer from ringing in their ears. And if you have the problem, it drives you crazy. Now, there is medication for it, but it's systemic therapy, and it makes you dizzy, it makes you nauseous. And this is the first medication or the first therapy, because it's a device that sticks on your ear that stops tinnitus. Now, it's sort of in that range of penny stock versus FDA approval stock, but I put it in the penny stock category because it's got a whole bunch of other therapies that are coming down the line. I don't know much about the alveolo-respiratory therapy and Sonotron. I don't know much about their pain therapy technologies, because these are much more nascent in their developmental stage. This one is just ready for rollout if it gets approval. And so really this is a purchase on the RX3 in an area where there is absolutely no treatment. And you can see it's just not going anywhere. I mean, it's about the same price it was where I bought it. And that's because there's been no catalyst. Now, the one thing that concerns me about it is no one's accumulating it. And I would like to see traders come in and start buying it up on the potential that that RX3 device is going to get approved and the stock is going to soar. But you know, I don't go with the herd. I don't necessarily believe that this is a widely known device. And so I'm just going to hold it. The fact that it's consolidating gives me a lot of confidence that it's not going to fall right now. And so it's a buy and hold position. Now, these are very, very unique investing opportunities. And you can see if you have a small amount of money, you can go with some of these pennies and make really nice returns. And then there are IPOs. And this is the toughest sector. I mean, I study the IPOs and study the IPOs. You can see really, really big gains. And I'll just show you some of my really big winners. I've only done a few IPOs that I formally put in this portfolio because they IPO'd in the last 90 days and I was able to give them out to everybody who's beta testing the service. And this is the first one. It's Roku. I'm sorry, this was not it. This was not one of the picks. This is in 2017 that I got. And it was I entered at 14, exited 73, made 424%. I love Roku as a stock. I think its streaming media platform is now, other companies are trying to duplicate it, but I think Roku has tremendous potential. And I would look to buy Roku on any major dip, either for an option on a move up or just as a long-term hold. BJ Wholesalers is just another one of mine. An IPO'd at 17, it's currently at 26, and I made 54%. And Spotify is one of my favorite stocks of all time. I really like it. I think it's a blue chip tech. An IPO'd at 166. The high, it was just under 200, and I could have dumped it at 200 or even dumped it at break even. But I'm down on it. I'm holding it because I think over the course of the next year or two, and this is one of the rare holdings I would recommend to hold, and we can get this stock down to 165. It's currently 139. I mean, I think it's a tremendous buy. And I'm going to make recommendations like this. I mean, they're yours to pass or play, but I really believe that Spotify is the Netflix of music. I have Spotify. I love it. It's got competitors, just like Netflix does. Netflix has Hulu. It's got the Amazon Prime service that streams movies. Everyone is trying to take down Netflix, and nobody can. Spotify has its competitors. It's got Apple. It's got other companies. But once you become a Spotify, once you create your big lists, your music lists in Spotify, you're never going to move. I mean, it's too complicated. It's almost like moving your house. It's like moving from California to Montana. It's just so difficult and so and so time consuming that once you get into it, you just stay with it. And I really, really like Spotify. And that was an IPO I purchased. I could have exited, and I'm just a long-term holder. If I had the money, I would buy more of it, but it's very, very expensive. So I'm just going to hold on what I've got. And then I'm going to look for more conventional stocks that we can pick up cheap. One of them that I recently recommended in the portfolio was Costco. It had one blip in earnings. It lost 25% of its value. It took a real dump. And I go to Costco, that's all I needed. I mean, I'll buy Costco on every dip. And it is flying now. And special options trades with terrific risk to reward. So that really, also I'm going to look at REITs, ETFs that I love for a whole basket full of reasons. One of the best trades I had in 2018 was the Mexico ETF. I made 300% on an options trade on that. They offer you tremendous opportunities as long as you do your due diligence. Now, they usually have a small open interest, and they're thinly traded. But if you get into a great ETF at a great price, you can really make a ton of money. Now, the thing about the ETFs is they're also extremely cheap options positions. REITs, too, offer great trading opportunities. And there's one REIT whose name that I just never got on board, but these are real estate trusts. And what they do is they only rent space to cannabis-related businesses. It's up about 100%. And I just missed it and didn't get into it. But it was on my watch list, and it was just one I never pulled the trigger on. So if you come aboard, I'm going to give you everybody talks about these bonuses, but these are nice, and it took me a lot of work to get them. And the bonus one is it's a 5-page report on the best pot stock to buy now. Now it is the blue chip pot stock. I would put it on your radar screen. Any 10% dip I would buy. I've been holding this stock for a long time. It is terrific stock. I think it is the blue chip cannabis stock. The other report is it goes over in 11 pages how to understand how the FDA works in fast lanes. Because if it announces that a medicine is going to get expedited review, it's going to send the price of the stock skyrocketing, because it means that it has selective interest in getting that medicine approved. It doesn't guarantee its approval, but it increases the probability that it's going to get approved, and that it's going to get approved fast. And there are 4 fast track lanes, and we're going to use those fast track nomenclature when the portfolio rolls out on Monday. And Monday, I don't know if there's going to be a pick, but I'm going to be looking around for something to buy. And that's an 11-page report looking at all the FDA fast track nomenclature lanes. The third one, I think these are 3 great biotech stocks for 2019. If you have a large sum of money or a decent sum of money, and you're just looking for decent capital appreciation on biotech stocks that pay really nice dividends. These are not speculative stocks. These are biotechs that are going to appreciate in value, not at 50% a year, maybe at 5 or 10% a year, and on top of it, pay you a really, really nice dividend. But if you're looking to put a little bit of fizz in your IRA, a 401k, any 3 of these can do that for you. And then my fourth one is we're going to hold bi-monthly strategy and educational sessions. We're going to go over all the positions we hold. I'm never going to hold more than 12. Never. one thing that I did, mistake I made in my options was I was holding 12, 15, 17 positions, a max of 12, and it's rarely going to be 12. I mean, we're going to look to rotate. This is not going to be a long-term buy and hold portfolio. I'm going to create options positions on some of the stock recommendations I make. We're not tracking the options performance. We are only going to track the stock performance. If you buy the option, I have every reason to believe it's going to be a winning position, but it's a riskier position, and I'm not going to track it. But I'm going to put it out there for traders who have less money to risk, and obviously it's going to cap your losses. You only want to risk $500 on the position. If you wind up with a worthless option, that's all you're going to lose. But we're going to look for the potential on an option of making a couple of 100%. So I've got the three people who've been in it. One is Dan. He's in New Jersey and Florida. I met him in Florida. He's a very, very wealthy guy. The only thing I asked him for was these three guys were testimonials. And he wrote, "I'm thankful I put my faith in you and your team. He's been averaging $15,700 a month in profits over the past 3 months." And that's real. Now, he is investing a lot of money. So don't look at the absolute dollar amount. He didn't provide me with a percentage. And I do not know the size that he's putting into each position. The other one is a physician in Connecticut. He made 30 grand in 1 day. He goes, "Mark, I have known you for many years. Thank you so much for letting me get involved with your new service. My count is already up 50%. I remember my very first option trade on Costco, and that was the one that I mentioned. And it was the most amazing thing. I bought 30 contracts and I made nearly 30,000 in profit on the trade." And the last guy, first 3 months, $21,000. He's earned a total of $21,000. All I did was give myself the chance. Actually, all you have to do in my eyes is give Mark the chance, and it'll lead you on your way. So I got 3 nice testimonials. In the first 3 months, we've made really, really good money. Now, I haven't hit a loser in the FDA category. There have been no IPOs. The options I've recommended have all struck it, and the couple of pennies that I recommended also blew it out. So again, I always like to diss myself and say that this cannot be how we work out in the future. But I believe that I can provide you with really steady gains. I have 3 brilliant people behind me on the FDA, in the FDA approval category. I think we can hone in on those medicines that are going to get that phase 2 approval. Once we get in, we should see accumulation and then a pop and then out. The IPOs are tougher. We went through the whole thing. You can pick and choose what you want to take a position in. So it's $997 for 6 months, and these are the different portfolios. Right? I'm going to track it as a whole, but I'm just going to indicate into which portfolio I would put it. Insider buying, the penny stock, the IPO, the biotech portfolio is going to be purchased on a unique event that's going to take it flying, and then just standard stocks and options that I'm going to look for deep pullbacks in which traders have way overreacted to news that really in no way affects the fundamentals of the stock. And the stock should come back strong, and we should be one of many who are buying on the dip. Now, I am going to give you a guarantee. I'm going to guarantee you 100% across all the recommended trades over 12 months. And if it doesn't, I'll give you a refund. And you don't have to return any of that stuff. I mean, I thought about it and thought about it and thought about it. I am so sure I can double your money, or not double your money, just get you 100%. If you're trading, if your portfolio is 10,000, I can get you to 20. If your portfolio is 20, I can get you to 40. And it's going to be over 12 months. And if you can make 100% on your portfolio in 12 months, you will do better than 99.9999% of all the real people who trade really. Not the gimmicks, not the baloney, not the $10 to $5 million, but the real money portfolio. As an aside, I take every trade I recommend. So that's the deal. I'll answer any questions. Here's our phone number. I'll send you out an offer if you'd like to come aboard. And let me see if there are any questions. Hang on one sec here. Yeah, I'm sorry. I got a million. There's no screen. There's no screen. I know. I'm so sorry. Okay, hold on one second, Jeff. I'm going to get you. Let me go to the top because I think I've got 20,000. There's no slides. Yeah, I did. I'm sorry about that, guys. Thank God Rory kind of dove in there and bailed me out of that. All right, let me look here. Thanks for staying in there. No, it was me. Thank you, guys. Jeff, whether you buy the stock on leverage or you buy the real stock is up to you. I mean, your broker is going to give you margin. So, you can buy the stock on leverage if you want to. I mean, I'm going to give you an entry price and an exit price for a stock, a potential option, a penny stock, anything. For every pick that I give you, I'm going to give you a pretty detailed explanation as to why we're going into it. You're going to get the catalyst. If there's an FDA approval date, you're going to get the approval date. So you can kind of get white knuckled as that approval date approaches. And you can watch how the stock behaves as the approval date does approach. If the stock trades up into the approval date, it's very likely we're going to get a winner. Because I'm telling you, they're insider traders who know whether or not that approval is going to come or not. And if the stock starts to dump into the approval date, we got to be careful. The insider trades are great. You just have to vet the company very, very carefully. We're just looking for a 10 or 20% upside. Okay, hang on one second. I'll get to all the cap. Ronald, I can't give you a suggested capital amount needed because, you can trade 10,000 here to 5 million. It really all depends upon your own, the amount of money you've got, the amount of money you want to risk, whether you're trading it out of a 401k or whether you're trading it out of an IRA. I'll tell you the three large cap biotech stocks. I recommend owning, and I recommend buying them on a dip. I wouldn't jump into them. A lot of them are down right now, but they are terrific companies, and they're going to pay you. If you don't know by now how well dividends will put a zip into your portfolio, if your goal is long-term capital appreciation, they're great. I can't really give you a dollar amount. I don't think I would trade it with less than $10,000. I don't. But listen, you're going to get opportunities for micro cap stocks up for FDA approval. They're going to cost you 10 cents a share. So, on that, obviously those are the riskiest. I'm going to try to make them along with my 3 associates, associated with as little risk as possible. But there's always risk. So I really can't give you an exact amount. I don't think I would trade it with less than 10. But, you can try to trade it with 5. Russ, you ever consider selling puts below the current price of a stock? And say, sure, Russ, but here's the problem. I used to sell naked puts, and I'll tell you, back in 2004 and 2005, I used to sell puts on Google month after month after month, and I was making a fortune until it stops working. So if you're going to sell a put, you can sell a put spread. And I may do that. I mean, we may sell put spreads, and we can sell out of the money spreads. The problem is the risk to reward on a put spread's not great. You know, for every 20 or 30 cents you're looking to make, oftentimes you have to risk a buck. And I would rather look at a spread, even an out of the money put spread, where I'm looking, if I risk a buck, I want to make a buck 25. Now, the likelihood of an out of the money put spread where you get the amount of money in your portfolio hitting is very high. But I can give you one example of an out of the money put spread I sold on Walt Disney and got crushed. Because the day of expiration, somebody came out and some broker, it was a Friday, on options expiration, and he just trashed the stock. And it went from about 107 down to 95. And it demolished my put spread, and I lost a lot of money. So I don't particularly, I'm not a big fan of it, Russ. Not saying it can't work, but it's risky. Charlie, I can't give you the number of recommendations a week. Sometimes there'll be 4 or 5, and sometimes there'll be none. When I see a great opportunity, we're going to grab it. And I don't want to chase the market or give myself, okay, I've got to provide you with at least a trade a week or at least 3 a week. I mean, sometimes they're going to hit you bang, 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 and sometimes they're going to be few and far between. My goal is to just get you winners. I mean, that's really the most important thing. No, I totally understand what you're saying, Russ. I'm just saying you have a lot of risk, and your risk to reward on those is not great. And let me tell you, Russ, there are a lot of option services that go out there and tell you, okay, you know, out of every 100 trades, they're going to make 95 winners out of 100. And what they're doing is they're selling huge, way out of the money put spreads. So most of them are going to make money, but you're going to make a tiny amount of money on the winner, and you're really going to get crushed on the losers. And if you look at the comments, everybody in there is like, it's a scam, it's ridiculous. So we're looking for a great risk to reward, but we're looking at the underlying fundamental stock. This is not an options service. This is a service in which I'm going to give you some options to trade on what I think are great stocks that are placed into one of those 5 categories. You can always do what you want with them. You don't have to take my recommendation. I mean, if I think that, remember, a lot of these small biotechs have no stocks. I mean, have no options. There is no option alternative. Obviously, like Costco, there was a great options alternative, and I recommended an options alternative because I felt Costco was going to come back within 90 days, and it did. Either way, you made great money. If you had the money to buy the stock, you did great. If you had money to buy the option, you did better. Okay, Eddie, if your student isn't as familiar with engaging in IPOs or options, for example, knowing you will spoon feed. I'm going to spoon feed them to you, Eddie. I'm going to give you the entry, I'm going to give you the exit, and I am going to give you every piece of information you need to take the trade. And remember, we're all going to meet every 2 weeks. It's probably going to be on a Thursday afternoon. It's going to be recorded, so if you can't make it, you'll still get the recording. You won't be, unfortunately, you may not be there for me to answer your questions. But what we're going to do is we're going to go over every open position together. You're going to get to ask any questions, even if you don't have it. I mean, if it's a position you stood down on, and maybe it's still hovering around its entry price, you want some questions about any up-to-date news. We're going to get together as a team, sort of, and I'm going to give you my latest update on all of our open positions and anything I see coming up on the radar. So if you want to start putting that on your watch list, like I have this watch list on my phone that's like 400 miles long because I follow about 150 stocks. And anytime I smell one that I like, I put it on that list. And at night, I go through them one by one by one by one. And it takes me like 45 minutes. It's not a big deal for me to do it, but I'm able to catch stocks really moving up hard. Right now, my options portfolio looks very, very good. And in the 3 months I've been in this, the 3 guys who have beta tested this for me, I charged them $0 for it because I wanted them simply to give me feedback, and their deal was they would give me a testimonial. And these guys have a lot of money, and so they had the ability to lose if my picks were bad. I'll just tell you this: the 3 people I have at the University of Miami School of Medicine are brilliant. They've never done this before. And when I came to them with this idea, I've known them all for a long time. They love the idea. And they're the 3 key fields. Immunology and oncology are really big fields because the anti-cancer therapy that's coming through is really based, or all oncologic, immunotherapeutic medicines, getting their feedback on the fundamentals of the medication and how it works based on their take is that's way past my knowledge. I can't do that stuff. They're going to give me, together we're going to sit and we're going to meet. That's the information I'm going to try to impart to you in our bi-weekly sit downs together. And then I have a cardiologist, and I'm not so sure that the cardiologist is that important, but they're great medicines coming out. And the reason I wanted a cardiologist is because there's a lot of great stuff coming out in devices, stents, bypass procedures, anti-cholesterol. There's a lot of stuff in the pipeline. They're all phase 1 trials right now. Nothing has been announced for phase 2, but I need an expert in that area to help me with those medicines. So if I don't know about, and then I don't have anyone in the opioids, because there's really no opioid field. I'm going to do those on my own. But if I get if I go to the University of Miami School library, of which I'm a member, and I can do a Nexus Lexis search, I can make a good guess on an anti-opioid medicine. So that's what we're looking to target, those classes of medicines coming up for FDA approval. If we can hit 2 or 3 of those, we're going to make 200 or 300% on those on those positions. And so this is really the way I've tailored this. I didn't want to make it an options alert. I didn't want to make it a stock alert. I wanted to make it something. It takes a lot of work, but I really, really believe this can be a very, very lucrative way of investing because it's all based on sound, fundamental information, and none of it's just okay, I'm just gonna shoot an arrow up into the air and see if it comes down on the target. I mean, and I'm going to give you my complete rationale for every entry, and every 2 weeks we're going to meet and we're going to have I'll bring some chocolate chip cookies and some fruit roll-ups and some diet soda, and we're going to have our meeting, and it's going to be like we're going to be an investors meeting, and we're going to talk about our potential investments, what's on the table, what's coming up, what we're in, what we're not in, and I think it's going to be a really, really interesting, very academic time, and we'll go as long as we need to. I never cut anybody off. I have it scheduled for an hour. It'll probably go for 3, but it's going to be a really nice meeting. So that's it. I hope to see some of you aboard. I really, really am going to work hard to make me and you money. So have a wonderful, wonderful evening. And don't worry, Eddie. I mean, we will bring you up to speed on everything if you want to come aboard. You don't have to have any prior knowledge of anything. I'm going to give you all the rationale, all the targets, all the stops, everything. So take care. Thanks so much for giving me your time on a Sunday. And at least I hoped. Thank you so much, Eddie. And at the least, I hope that I've opened your eyes to a whole new area to a number of different areas, of investing venues that very, very few traders take advantage of. Very few, you see very little information about traders looking to get into medicines before a phase 2 trial. And remember, there's always the phase 3. I didn't even bring that up. But once the phase 2 hits, the phase 3 is a head-to-head. Is this medicine better than another approved medicine? It's another way you can get that thing up and a killer. And on a phase 3, I don't want to go into it. These are for the investor meeting. But then there's phase 4 trials. I mean, these things we can ride on a successful medicine. I mean, there's a lot to it, but you never hear about these things. The same thing with IPOs, the same thing about insider trades, and the insider trades you do here is all garbage. I mean, I'm going to vet the stock and tell you why I think it's a great purchase. It's got to be in the right sector at the right time, purchased by the right person in the right amount, trading at a technical level that we like. When all of those things hit and they all align, we're going to be in on that insider trade. And I will recommend options when possible. So listen, everyone, again, have a great evening. Okay, Russ, this sounds very interesting. Day trading, thinking about playing with my IRA. Sure, Russ. Let me tell you, if you have some money in your IRA that you want to allocate, I think it's a really great idea because you can asset allocate. You can take some and put them in some blue chip biotech, which I'm telling you are going to make you great money over time, and then take some and put it in some much riskier areas, which I'm telling you can pop you 150%. Not on magic, but on a lot of work. And I'll tell you, after a few meetings, all of you are going to get a great feel for what I'm doing, and you're going to be able to do some of your own vetting. I mean, you have to, for the FDA approvals, it's going to be very hard to do because you have to go to the library and read about stuff that's very technical. You need a little bit of background. But for the IPOs and many of the other positions, you're going to get a great feel for what works and what doesn't work. And you're going to see exactly what I'm looking for. And you're going to become a very informed investor in sectors, in investment sectors that you're really probably just not familiar with now, in which people are making great money, but they're just not talked about because what's talked about mostly is just the scam junk, not the stuff that takes a lot of work. I mean, I have enough time put aside from flying on my Learjet, back and forth from Tahiti to here to do this work. Where these guys, they're on their Learjets 24/7. So listen, have a wonderful night again, and hope to see some of you aboard. And my goal is to make you money and to make myself money. And I'm telling you, I'm going to put a disclaimer on the newsletter that I'm in every position, and I will enter that position at the price I recommend. I will not be in ahead of you. If I put in the price, it's $26. That'll be the price that's entered in my live portfolio. I will not get in ahead of anyone, even if the stock is a 2-cent stock. I'm going to recommend the price and be in with you on it, not ahead of you. Have a great evening and have a great night. And I'll see a lot of you in the live trading room tomorrow. And let's bang it out tomorrow and beat that NASDAQ with a broom. Have a really great evening. Bye-bye.